Hello everyone, welcome to Bankers Forum video on Sovereign Gold Bond Scheme. Sovereign gold bonds have been portrayed as a good investment option for those who want to invest in gold and for those who want to earn some interest through their investments in gold. So today we will discuss about sovereign gold bonds. First, let's start a little basic about the whole concept of sovereign gold bonds. Sovereign gold bonds are issued by Government of India and RBI issues them on behalf of Government of India. Now, the first thing that comes to our mind is how is the price of these gold bonds determined? It is a simple concept that the price of gold bond is determined as a simple average of the closing price of gold of 999 purity as published by Indian Bullion and Jewelers Association. And the price that is considered is the average of the last 3 working days of the week preceding the subscription period. Let's make it more clear. For instance, for the gold bond series that is opening from 5th of June, the price that has been taken into consideration is the average price of 31st May to 2nd June. Moving upon. There are various channels through which sovereign gold bonds can be purchased. For example, scheduled commercial banks, that includes public and private sector banks. Then Stock Holding Corporation of India Limited. Several of the designated post offices and stock exchange like NSE and BSE. One thing to be noted here is that small finance banks and payment banks like Paytm cannot distribute sovereign gold bonds, although there are many options that the small payment and payment banks are giving for purchase of gold, but that does not qualify it as sovereign gold bond. Now, main provisions of sovereign gold bond are, first of all, an interest at the rate of 2.5% per annum is paid for these gold bonds, and interest paid frequency is half a year, that is every 6 months interest is paid for these gold bonds. Secondly, these gold bonds can be traded upon secondary markets. Then the total term for these gold bonds is 8 years with an option to exit after 5th year onwards. The whole provision list of these gold bonds provide that these gold bonds can be used as collateral security, but the government has not made it clear that how it can be used as collateral securities. I think that these gold bonds can be pledged like equity and debt markets. Then the government has also provided for a ceiling amount, that is, in case of individuals and HUF, the ceiling amount is 4 kg, and for trusts it is 20 kg. One thing to be noted is that you get a 50 rupees discount when you are purchasing the gold bonds through online or digital modes. That is, if you are purchasing these gold bonds through internet banking, you will get an additional discount of 50 rupees. Moving forward, this is just a chart showing the historical change and historical prices of various series of gold bonds that has been released by the government. And as you can see, the price has been escalating gradually, and there is no drastic change, but there is some amount of increase. For the upcoming series of gold bond, that is starting from 3rd of June to 7th of June 2019, the purchase price has been set as 3,196 rupees. But if you are purchasing it through online, you will get a 50 rupees discount, and the net effective price will be 3,146 rupees. Now this is the chart showing the various date of gold bond series that the government has decided. Now the first series is opening from June 3rd to 7th, and the government had decided that the gold bonds will be released every month till September. So the second series will come in July, then in August, and then in September. Coming on to the advantages of sovereign gold bond, there are a few advantages that can be kept in mind if you are planning to purchase these gold bonds. First of all, These are highly secure gold bonds because it is fully backed by government and issued by RBI on behalf of the government of India. Secondly, and the most prominent one, that government is paying interest on the sovereign gold bonds, whereas you don't get any interest income from investing in gold from elsewhere. Then one can also say that the gold remains in high demand throughout the year and across the years. As we also saw in the historical analysis of the gold bond prices, the price of gold bond has been gradually increasing and did not show any drastic changes. So we may say to a certain extent that the prices of gold bond are not much affected by market forces. Then the government has also proposed that the changes in the gold bond will be exempt from long-term capital gains tax. That means, suppose if you are purchasing the gold bond for 3,000 rupees now, and after 8 years the price of the gold is suppose 4,000, so the 1,000 rupees profit that you are making would be exempt from long-term capital gains tax. Okay, now let's move to the demerits or the negative points of gold bonds. First of all, the gold prices are highly uncertain. Like, although they are fully backed by government, but the government does not have an absolute say upon the prices of the gold in the market. Sorry. Secondly, the interest, although the government is paying interest on gold bonds, the interest paid is not very attractive. I mean, 2.5%. Your saving account gets much more interest than that. So if your prime concern is to earn interest out of gold bonds, this might not be a good option for you. Next, the interest earned is taxable. So if you have invested a sizable amount in the sovereign gold bonds and you are making a good amount of interest out of it, then that interest income is taxable. So you need to keep in mind. Okay, next thing is that the gold bond have a fairly long maturity period of 8 years, and we think that that is a long period because there are many other options that could give a give a better return than the sovereign gold bonds. Now, this was the analysis by us for sovereign gold bonds, and this is the right time if you are planning to invest in sovereign gold bonds, then maybe you should encourage others to invest and diversify your portfolio. We'll be coming back with more such videos, and please share and comment with your suggestions, and thank you for watching.